Welcome, ladies and gentlemen, Precious and Battery Metals Summit here in the Zurich 2018. And with me here is now another battery metals company. We want to talk about manganese now. Giyani Metals, and Robin Birchall, the CEO, is here to give us an insight into the manganese market and, of course, into his terrific company. Welcome.
Yeah, thank you very much.
Yeah, great to have you here. First of all, maybe you give us a short overview on the company. Where are you located? Where are you working?
Sure. Giyani Metals is a manganese for the battery market company with our assets in Botswana. The assets, we acquired them about 2 years ago, and we've been developing them over this last year quite rapidly. Getting in place our mineral resource estimate and moving towards the development of the asset for production.
Oh, fantastic. So production is always good, always key to success, finally. Manganese. Why manganese? I mean, we always hear lithium, cobalt, copper for the e-mobility. But manganese is, let's say, not maybe on the main radar of the investors. Maybe you can elaborate a bit on that.
Yeah, that's right. Well, look, the cathode in the battery, which, in the lithium-ion batteries, is made generally of NMC, nickel, manganese, and cobalt. Clearly, cobalt, everybody, is very interested in this because of the shortage and the fact it comes from DR Congo. Nickel, of course, this year has gained a bit of traction. And the third one that's very important, that really gives safety to the battery, is manganese. And what people haven't really thought about yet is the fact that the manganese units that are available in the market at the moment, they're mostly directed to the steel market as direct shipping ore. And they are not very amenable to being converted into the material you need for the battery, which is the manganese sulfate. You do that by taking EMM or EMD and turning it into a sulfate. So some of the large companies like Umicore, based in Belgium, quite a large company, one of the largest cathode manufacturers, they will buy the EMM and they will turn it into the material they make the cathode from.
Interesting. So how much manganese do I need for, let's say, a normal standard battery?
Well, I think it's about 20 kilograms that goes into the battery. It's about the same proportion. It's heavier than both nickel and cobalt. But on a cost basis, it's about 2.5% of the battery pack itself. So it's not very much. It's about something like $120 to $250, which is why actually they're pretty price insensitive. They're not really worried about the price. They can pass it through. It's the cheapest of all the metals that goes in there. But you can't make the battery without it.
How does the world market look like? Is supply demand in a balance, or is it also like the other metals now going into physical deficits?
Well, I mean, that's a very good question because it's a sub-component of a larger market. There's quite a lot. So it's 18 million units of manganese produced annually and about 40 million tons. So it's at about 37% grade. However, in the battery and the chemical market, total EMM is about 1.1 million tons, of which about 500,000 goes into the battery and chemical market. If you think about the number of vehicles that are going to be made and the average amount of manganese is going to be in there, I mean, who knows, 2 to 4 million to 5 million units will be needed in the future. That's a considerable amount, and that well, you already see the price has doubled almost in the last 12 months. It's gone from $1,750 for EMM to almost $2,800. It was up at $3,000 earlier this year. It's settled at around $2,800.
That's per ton the price, right?
Yeah. So you can see by far much cheaper than cobalt, which is whatever, 75,000 a ton, and nickel, which is around about 12 to 15,000 a ton. So it's very, very cheap relatively.
Okay, perfect. So now we have the roundup on the market that looks very favorable. So let's dive into your project. You are in Botswana.
Correct.
I mean, Botswana is like we call it Switzerland of Africa, right?
I'd say that's right. Yeah, I mean, I've done a lot of transactions in Africa in the past, but I hadn't been to Botswana for quite a long time. It's developed considerably since I was there about 15, 20 years ago. It's a very safe country. It's the only country I know in Africa where the police don't carry guns. It's quite well developed in terms of the physical infrastructure and also the sort of intellectual infrastructure. So the lawyers, the bankers, the accountants, all that kind of infrastructure is in very good place. And we happen to be right in the bottom right-hand corner, quite close to Johannesburg. So in that corner, you have power, water, rail, road, and the international airport.
So meaning all the necessary infrastructure. Fantastic.
And we're about 75 to 100 kilometers from the capital city, not very far at all.
Great. So what does your project look like? You already said you have a resource on that, but you want to bring it in production. So what's the status of it now?
Okay, so what the next step step is we're going to do the PEA. That will take us about 3 or 4 months to get that done.
From now?
Yeah, so we started basically on Monday with that, and it'll be done sometime. Look, it should be done in the back end of January, and then there's the 45-day period to file the report with the exchange. At the same time, we're granted our approval to do an EMP, which is the first stage before an EIA. That again will take us about 3 or 4 months. We are doing second phase hydrometallurgical testing, so we're doing the extraction and the electrowinning testing next. And then the final thing is we have some DSO material. It's sort of like cash lying on the ground, about maybe $10 million worth of it.
Okay,
we'll net maybe $4.5 million from that.
Yeah.
And we're just doing the metallurgical test work to produce a product that will be sold in South Africa, well, maybe to China.
Okay, fantastic.
So that's the next 6 months or so. After that, we'll be drilling in the middle of the year next year. Our resource at the moment is inferred. We need to bring that up into measured and indicated, and also we need to fill in a few holes that are in the resource. We'll probably add about 30% just from filling in the holes. I would like to also go and drill in our third deposit. That I don't know how much it'll be, but sort of arm wave, maybe 1.5 to 2 million tons more. So it's doubles the size of the resource. It'd be very good.
Yeah. What is the resource so far?
It's 1.1 million tons at 31%.
Okay, perfect. So what do you think it could support after the doubling even? What mine life could this support? Just roughly speaking, forward-looking statement. I know it's only an estimate, but do we talk about, let's say, an initial mine life? Voilà, that's what I wanted to say.
It's about 10 years on the first deposit, and we'd probably would increase production. But the second deposit is probably another 10 years. But we wouldn't have 20 years. We just do more for 10 years.
That's normal. Yeah.
And look, we have a very large land package as well. So because of the way that, it's, if you think about maybe the Pilbara or something like that, Fortescue, they had the flat-lying iron ore disseminated across a large area. Our manganese is quite similar to that. It's stratiform bound in the black shales. It extends over a very wide area. We just need to do some more basic exploration. And, we've got a fingerprint that will be, or a footprint that will be huge. But we have focused on getting one small project ready and to market. So that's been the key.
Yeah, great. So how does it work then with the mining? It's like open pit?
Yeah, it's open pit mining.
Okay, and how do you produce then the product if we talk aside of the direct shipping ore? Because direct shipping ore, you put into the container or the truck and then you ship it.
Gone,
But then when you have your manganese product, I would call it, for the battery production, how do you do that?
Well, look, it's basically the same as if you think about Chile and copper. It's soften extraction, electrowinning.
Okay.
So what we do is we crush it down to around about 200 microns. Then we acidify it. That goes into a solution. Then we extract using kerosene, same as what you do in copper in SXEW. And then you take it out of the kerosene and you electrowin it onto a plate, and you get manganese metal flake, and then you ship that.
Okay. Yeah, and that's easy to ship, I presume.
Look, it's a higher grade value product. It'll be bagged, so it'll go in containers rather than in rail cars or trucks or anything like that. So we'll ship it as bags, and we'll probably be able to sell at mine gate because there's quite a lot of demand for the product, both from the steel market and from the battery market.
So what is the path to production? How long will it take? What do you estimate? And what might be the Capex to bring the project in production? Just a rough estimate. Do we talk about $50 million, $500 million?
Well, look, I built a mine similar size, similar-ish production circuit for $65 million in the Arctic. So I would hope that we'll be less than 65, but I'm using that as my basis. The PEA will tell us. I hope it comes out less than 65, but as a capital intensity basis, it's about, on 65 over a 10-year mine life of, call it 1.4 million ton resource, like if we add those extra tons, then you're talking about $50 a ton of rock capital intensity, $7 to pay a 15% return, $7 to pay a 15% WACC. So, that's a pretty decent sort of level, considering our rock will be worth $900 a ton or something like that. And if you add all the rest of the costs in, it's probably another couple of $100. So we have a good margin, maybe $600 margin on the rock.
That's a lot. Even if it would be 400 or 500, you would be in perfect shape, I would call it,
Yeah.
because your product is needed, definitely. Because
well,
the e-mobility revolution is going on.
Yeah,
It's unstoppable.
At the moment, without going too much into that, at the moment the Chinese BYDs are making about 8,000 buses a week. That's 52 times too little, because the global consumption of these kind of light vehicles, delivery vehicles and buses is about 20 million units, 22 million units a year. That's about 450 or 460,000 a week. They're only making 460,000 a year at the moment. So the consumption of manganese, cobalt, and nickel and lithium is going to go up considerably on the demand side, for
fantastic. So how looks the financial situation? What's the financial status of the company?
Look, I mean, we have a number of assets on our balance sheet, so hopefully we won't have to raise any money. The cash that's generated from selling the DSO or will pay for most of the feasibility study work and the drilling next year. We may top up a little bit in the future, but we don't really need to.
Yeah, that's always good.
Yeah, small companies always need more money than they think.
And I think you have also some assets which you want to get rid of.
Yeah,
right?
we have the gold assets in South Africa. At the moment we're trying to sell those. I mean, they won't net very much, maybe $2.5 million.
Yeah, better than nothing, I would say.
And we've got about $1 million to $2 million worth of stock in another listed company. It's currently suspended, pending a transaction, but we hold that as well. So we have good resources.
So it looks all good. Thank you very much. It was a great insight into your company and the market. And we keep fingers crossed that then everything goes the way you wanted it.
According to plan.
Yeah, the market needs your manganese definitely, and we want to see you in production.
Well, thank you very much for taking the time
with
me
today.
Yeah. Excellent.
Ladies and gentlemen, it was Robin Birchall, the CEO of Giyani Metals, and you heard it, manganese was now our theme. The market looks really interesting as cobalt, as lithium, because you really need it for the batteries of the future here. And supply and demand, it looks a little bit like by 2019, 2020, this is also going into an imbalance. And so we need definitely more supply because the demand is growing and growing. And it looks like the company is doing everything right. They have already DSO, which they can ship directly, so they can make the money out of that and use it for the PEA and to develop do the drills and develop the ground further. And let's see, next 2-3 years, hopefully they're in production then. And check out the company. Thanks for watching us. Bye-bye from Zurich.